This is Winning IR, a podcast exploring the diverse insights within the IR community. Join me, Mark Fasken, as I sit down with IROs and other IR stakeholders to discuss the winning strategies, tactics, and shifts in thinking that are redefining the profession. It's no secret that investor targeting is top of mind for IROs and executive leadership in many public companies. With volatile market conditions resulting in constrained access to capital, having a diverse shareholder base is more important than ever. I've had the pleasure to host a panel with today's guest on this very topic before, so I'm excited to share his insights with you all today. Scott Einberger is the IRO at JLL and is a seasoned IRO with over 20 years of experience in investor relations and finance, including 17 years at US Foods. So Scott, you and I have been on a panel in the past in Chicago. And something that surprised me was just how involved you are in the targeting and outreach process at JLL. I mean, JLL is a big company, well held from an institutional perspective. Can you walk us through your approach, your thinking as it relates to targeting?
Yeah, hi, Mark. Happy to do that. And I really enjoyed the time we spent on our last panel, so hopefully this one will be just as good.
So even better. Even
better, yes. I've always enjoyed targeting. It's something that I've just had a good experience with in my past, and the outreach piece that goes with it, I think, is important also. So maybe we can talk a little bit about that. But when I'm building a targeting list, really what I'm trying to do initially is just put together a comprehensive list from a lot of different data sources that I can use as a starting point. And so I'll take things, like from Irwin, and they have a great recommendation tool in there for targets. And I'll pull firms from that list. I'll look at peer ownership, third-party lists. A good source of information is banking partners. I've worked with my treasury group in the past where they've had recommendations, and the banking partners will send you a targeting list where you can get a lot of good information from. And then the sell side is a good spot also. So really what I'm trying to do is just get all of that data together into one list. And I'm really not worried initially about trying to filter the list or sort it in any way. I just want to try to get a list of firms together and use that as kind of my starting point, or a database, so to speak, to begin with.
Just a follow-up question on that. When you get those lists from sort of your banking partners and everything, do you find that those, or are you asking that they often come with some sort of explanation on why they're part of the list? Or are you sort of just getting an Excel spreadsheet that's saying, here's a bunch of institutions and their AUM and maybe some of the peers that they own?
It's a little bit of both. I do like to get the color behind it. So I will ask for that a lot of the time. Why did you recommend this firm? Or how did you put together your targeting list? Did you look at peer ownership? Did you look at market cap? Did you look at who's a good fit from a value or growth perspective for my firm? So I've tried to do that in the past. Sometimes you get varying degrees of information back, I feel like, where it's some's more valuable than others. But I think that's a good starting point.
Awesome. So now you've got sort of this big list of names. What's the next step to start to refine it?
Yeah. So now that I have this list together, I really want to start to sort it and rank it. And so for me personally, I like to do some of that research myself. And so I'll go in and use my IRM tool, and I'll start looking up firms and contacts and try to get a feel for who's on my list. And one of the things I'm looking at is, who have I talked to recently? I think that's one of the key aspects of this is, if you have somebody who you've talked to recently, you know that they're interested, right? And that's a great starting point. And those are firms that I want to move up to the top of my list. I'm also looking at peer ownership, like we talked about, who might own our peers. I think that's a good way to kind of get a feel for who's interested in the sector or in your industry. And then you can really leverage that as you have conversations. And then a couple other things I look at is the position size. When I'm targeting, I want to try to get firms who can take a meaningful position in my company. And so usually I want to try to start with the larger firms and then kind of work my way down. And so I'll take that into consideration as I put together the list. And then I also kind of look at who's owned us in the past, right? You may have past owners who aren't current owners, but obviously had an interest at one point and something happened with the story where maybe they disengaged, but you have an opportunity to kind of win them back. And so I factor all of that in. And then what I try to do is start to rank order some of the firms. And at this point, I'm not really worried about trying to necessarily get to a top 10, which is kind of my ultimate goal. But I just want to get a kind of a rank order list where I can start to then put firms into large buckets. Like here's a top list, a middle list, and a bottom list. And then from then, I'll try to start refining it a little more.
That's great. One question I have for you is you mentioned a few of the data points that you use to decide and sort of stack rank those investors. I mean, we've talked about this in the past with when we have our fit score technologies. Well, it's one thing, but there are people who talk about using machine learning and artificial intelligence and whatnot, and are pulling in hundreds of different data points. Like, what's been your experience with solutions like that? Do you find that they work, or do you find that sort of like the simpler approach is better? Do you have an opinion on that?
I've always found the simpler approach is better. I think that some of those AI tools and some of those scoring systems can help you directionally, but I haven't found them to be overly accurate, at least in my experience. I've had a number of top holders in the past who have a very low score when you look at whether it's that ranking or the suitability score, whatever it may be. And so I take that with a grain of salt. And if you have a high kind of fit score, I'll reach out and I'll put you at the top of my list initially. But for me, it's really just one factor across a number of metrics I'm trying to look at.
Well, and I think even on that panel there was some discussion in the room of people saying one of the challenges with that approach is that you do lose some of that context, right? I mean, even when you're talking about past interactions and things or previous holders, all of that stuff is super helpful, but sometimes it can get lost in the hundreds of different data points that are being pulled in. It's not a criticism of other ways of doing it. It's definitely been a topic of discussion over the years in terms of how to approach targeting.
Yeah, what I found is that you kind of look at that score and it's based on a lot of different metrics, right? And a lot of them are financial metrics. But firms have a number of different funds they're running and strategies, and those change all the time. And they may be introducing a new fund or a new strategy that you could be a fit for that really isn't factored into that score.
Right. Okay. So that's great on sort of your approach to targeting and sort of how you pull together these names and how you stack rank everything. My other question, you talked about banking partners and sell side. How much of the targeting work is done in-house versus working with brokers or other third parties?
I like to do almost all of my targeting work in-house. That may just be my personal preference and feel for it. But I've just found, I think over the years, that I can get equal or better value doing it myself than I can using a third party. And some of that's just I've built over the years this kind of database of firms and contacts that I can go out to and utilize. And I feel like you kind of build those relationships and then you can leverage them in the future.
Yeah. What would you say? We have a lot of conversations with IROs about targeting. A lot of people say they don't have time for it. And I don't know if it's just a misconception about the amount of time it takes or what is required of them. I mean, clearly, you work for a very large company, you wear a lot of hats. I know that from having, a number of different conversations with you that you're very busy. What would you say to somebody who's thinking, I know that I need to do targeting, I know it's important, but I don't have the time?
I think that really the biggest time commitment is at the beginning, trying to get that list together and then rank it. Really after that, I don't feel like I spend a lot of time targeting, maybe a couple hours a month. I'll try to update the list when we go to conferences and I see who's on our conference list. I'll maybe move some firms around and get a feel for who's interested in us. But really, once you have the list going, updating the contacts and maintaining it doesn't take a lot of time. And then once a quarter, we're going in and looking at ownership when the 13Fs come out and see who may have changed their share position. And we'll do some updating at that point also and get a feel for what's happening ownership base. But even that initial piece, if you think about how long it takes me to put together maybe that master list, if you will, it's I don't know, maybe 10 or 15 hours of work, and you can spread it out over multiple weeks or a couple months to get that list together. So I haven't found that it takes a significant amount of time. I think that's maybe more myth than it is truth.
When we think about you build the list, that's one thing. And then there's the actual outreach and meeting with the targets or speaking to the targets on that list, which becomes the tricky part a little bit. So it sounds like a lot of that is happening at conferences, but you're also, correct me if I'm wrong, you're doing also some just direct outreach to some of those firms to say, hey, I may not meet you at a conference this year, but I'd love to have a conversation. Is that correct?
Yeah, absolutely. I'm doing that all throughout the year. I do it when we announce earnings. I'll reach out to the firms on my target list and I'll ask them if they just want to have a call to touch base and maybe talk through the quarterly results.
Okay.
That's a good way to just get the ball rolling, get them interested. And then I'll follow up. If we're doing an NDR and we're going to be in a specific city, I'll reach out to firms that are on my target list for that city. And I tend to do NDRs both with the sell side and self-organized NDRs. And I found that I can get a little better result with the self-organized NDRs. I get a little higher quality meetings, more long onlys, and I can customize my outreach list a little bit that way. You do have to be patient with it because not everybody will respond immediately, and it takes a little bit of effort to try to follow up and make sure you're staying on top of it. But I think if you kind of get that ball rolling, you can have some good success doing your own outreach and scheduling your own NDRs.
That actually sort of gets into our next question, which is just talking about quality of meetings. So you're finding that you are getting some higher quality meetings and doing your own outreach, and talking about sort of doing your own outreach and doing some of your own NDRs. Any tips or tricks on how people can be more successful in their own outreach or in setting up their own meetings?
Yeah, I think trying to build relationships is important. And I always try to find the analyst who covers my industry or my sector, because I really want them to build the model and do all of the background research that the PMs are then going to use when they make an investment decision. And if I can get to the analyst, then I'm already halfway or more of the way there to winning a target. And so that's where I try to start. And there's several different ways you can go about that. A lot of the larger firms have corporate access groups that you can reach out to and ask who covers your industry. I think that's a good starting point in a lot of cases. I'll also ask the sell side sometimes if they can be a resource at some of the firms. And then another good way to do it is looking at conference lists and seeing who pops up on your list. Like I've got a number of targets actually from the initial conference lists that I've had of people who've requested a meeting. And then I've found that, a lot of times those meetings change and people drop off of your conference list. And when you actually get to the conference, it's a shorter list or the list has changed. But that initial list, that there was some interest from those people originally, right, to request a meeting. And so that's a good source also. And a lot of times I can get analysts' names from that and then start to reach out to them individually.
You made another point, which I thought was interesting. I've never really thought about that before, which is also talking to your current shareholders about potential targets. Is that, maybe you can expand on that a bit? Yeah,
I've done that a number of times in the past where I've just asked a current shareholder, they speak to somebody at a specific firm, or do they, have a contact there that they know? And everybody in the investment community is talking, right, frequently amongst themselves, and they have contacts. And I found that they're actually really willing to share that information a lot of the time. If they're a shareholder of your company, they have a vested interest and they want your share price to do well just as much as you want your share price to perform well. And so, they're willing to share some of that information. I've got some good leads that way with firms that I didn't necessarily have a contact at, but it got an introduction. And then it's even better than reaching out cold, right? Because you're having somebody introduce you and you already kind of have the beginning of that relationship and your foot in the door then.
That's a great idea. And I think viewing those investors, to your point, as partners, right? It's a win-win for them if they can make an introduction and that all works out. That's a great idea. So the next question is it almost relates back to the question I had about investment of time and setting the right expectations around targeting. What is your sort of goal? Like what is the outcome when you think about, okay, I'm going to build this list of investors. I'm going to do some of this outreach. What does success look like for you?
Yeah. So we talked about building the list and then ranking it. Usually what I try to get to in the end is a top 10 list that I can really be proactive with throughout the year. And I want that to be flexible, right? I may start reaching out to firms and I may find out that some are not interested, but there's others on my list that could be. And so I want to evolve that list as we go along. But ultimately, I want a top 10 list where those are the firms that I'm really focused on this year. And my goal every year is to convert at least 2 of those firms and have them be shareholders. They don't need to be top 10 or even top 20 shareholders initially, but I want them to have enough capacity and AUM to take a meaningful position in my company over time. And then I can build and cultivate that relationship as we go along, and hopefully they build their position size over time. But that's my goal. And I found that it takes kind of 4 to 6 meetings really to get a long only involved. And so you need to have those upfront meetings with the analysts to get them comfortable and to build the model. But then you need to have a couple conversations with the PM. And then ultimately they want to talk to your CEO or your CFO. And you probably need to have at least 1 or 2 conversations with the C-suite before they'll take a meaningful position. And so you just have to understand that timeline and that it could take multiple months to really convert a target.
And I'm sure that it varies widely, but what would you say is sort of the average timeline that you see? Is it a year? Is it a bit less? I'm sure in some cases it's multiple years, but.
Yeah, it could be multiple years. I would say once I start to have conversations and you've had 1 or 2 conversations, probably 6 months, maybe 9 months is a reasonable time frame. They're going to do some research. They're going to want to get comfortable depending on how familiar they are with the industry and your particular story. They're going to want to spend some time digesting that. Some of the investment firms have to go to committee depending on what the firm is and how they're structured. So that could take a little bit of time to get approval for the PMs to buy a certain equity. And so that 6 to 9 month period seems like a reasonable amount of time for me. I've had some firms where I've reached out to them where we've had an initial conversation and it kind of went cold for a little while. And then I followed up again and we had another conversation 6 or 9 months later and the ball started rolling. And, so sometimes you're right, it could take a year or 2 before the timing is right for them and they have a spot in their portfolio for you.
So it's sort of convert 1 or 2, that can take 4 to 6 meetings and anywhere between 6 months to 10 years, who knows? Okay, that's great. We actually sort of covered this. We're talking the criteria that you use to determine which investors are the right fit for you. So we talked about peer ownership, sector ownership. Do you also look at things like, do they invest in companies with similar fundamentals, or are there any other criteria that you're using that we haven't covered yet?
I do look at fundamentals. For me, it depends a little bit on the firm you're going after. I think of firms in maybe 3 different buckets. There's the large blue chip investment firms where I feel like there should be a spot for almost every company somewhere in their portfolios, right? They have a number of PMs of different funds that they're running across asset classes. And I feel like there should be a spot for you. It's just finding the right analyst and the right spot for where your company fits. And so with those firms, I'm a little bit less worried about fundamentals. I'm more concerned about finding the right person and the right analyst to speak with to get my foot in the door there. And there's kind of those mid-sized firms where I think the fundamentals are a little bit more important because they're maybe not running as many funds and they may have a more focused strategy, and you need to be a little bit more diligent about whether your story fits within their strategy. Are they really, a growth or a value fund that you're targeting, and how do you fit there? And are you the right market cap for that specific fund? And so I'll look at some things like that. And then there's also the last bucket for me is really kind of industry specific investment firms. So JLL's in the real estate field, and there's firms who just invest in real estate, right? And there is where I'm probably the most focused on things like fundamentals, because that's probably where you're going to differentiate the most from your peers. And they're already going to be familiar with the industry and in a lot of the companies within that industry. And so your fundamentals being a good match for what they're looking for is going to be more important in those types of situations.
Yeah, that makes sense. And you also, though, in all of this, not to confuse things, but in all of this, you've also said it's important to not get too caught up in fit. What do you mean by that?
Yeah, that's a good question. I try to use fit as a way to kind of rank order my list, but I don't want to get so caught up on whether an investment firm fits my particular company at the moment, because I found that, like we talked about earlier, sometimes you think an investment firm is a bad fit and they really turn out to be interested, right? And I've had the opposite happen where I think, oh, I should be a really good fit here, right? But they don't have an interest, or sometimes it's staffing, or they don't have an analyst covering your sector or your industry at the moment. They could have turnover, things like that impacted. So I try not to worry too much about fit. I really want to reach out to firms and try to see who's interested and then start building relationships as I get responses.
Speaking of responses, that is one other question that I had for you, because we actually get this question a fair bit, which is, what does the response rate look like to your emails, phone calls? Is it 1 in 10? Is it 2 in 10? Does it depend on the sort of channel that you're using? Helpful to understand.
Yeah, I tend to use email at least as the initial way to reach out. I find that to be the least intrusive, and I get the highest response rate that way. But yeah, it does vary a little bit. I'll just give you an example. We did an NDR in December in Boston, and I reached out to 9 firms on my target list there, and I got a mixed response, as you would expect. I think I had 4 or 5 firms that I just got no response from. I had a couple firms that I got a polite decline from. And then I had 3 firms who accepted our meeting invite. So, I say 3 out of 9, 3 out of 10 kind of seems like a good ballpark for me in terms of an acceptance rate, but it can vary a little bit. And I would say just be patient with it, right? I try to reach out at least 3 times to a firm before I kind of move them to the very bottom of my targeting list.
Mm-hmm.
I don't like to drop anybody from my targeting list. I want to keep them there because things change, people move around, but I may move them to the bottom if I've reached out a few times and I haven't got a response from them.
On that, and so it sounds like a lot of what you're doing though is via email. Is that correct?
Yeah, that's correct. I think that's the easiest way to do it.
Yeah.
If you can just introduce yourself real quick. Occasionally, if I'm at a conference and so forth, and I know a specific investment firm is at the conference, but they're maybe not on my particular meeting list, I may try to find them or just introduce myself if I can during lunch or in the hallway or something like that to try to make an introduction. But emails seems to be the most effective way. I've done a few kind of cold calling where you just reach out, but that seems to be less effective to me. And I think people appreciate the email and the opportunity to respond on their own time.
How much do you customize some of those emails? Are they vastly different depending on the investor, or you sort of have a template that you use and maybe you put a little bit of customization around it just depending on maybe the firm that they're at, or people have talked about their education, where they went to school, things like that. I don't know, a football team that they follow, something along those lines.
I haven't got quite that personal in some of my emails, but that's not a bad idea. Maybe I should evolve my strategy a little bit. Usually all I'm trying to do is just introduce myself and the company. And so mine tend to be pretty short. I found that if you have a really long intro email, people probably aren't reading it. So I just want to get my company name in front of them, introduce myself, give them my contact information, and maybe just give them a couple sentences about the company and where we're going and why I think we're a good opportunity. But usually I'm trying to keep it pretty short. And my template varies a little bit, I would say, depending on who I'm reaching out to. And if I know they're familiar with the industry, I might, give a little bit less background there and focus more on just the firm itself or my company. And if there's somebody who I know probably isn't heavily invested in my industry, then I might spend just a few minutes with a industry background or a couple sentences on that, but usually no more than a paragraph, like 4 or 5 sentences in an email.
Okay. You mentioned just a minute ago an NDR that you were going on and you were doing a bit of outreach. Was that an NDR that you were setting up yourself, or was that being set up by one of your banking partners?
That one I did on our own. So I self-organized the NDR we did in Boston and reached out to some firms. We had a nice mix of some of our current shareholders who we met with, and then the 3 targets who I mentioned.
And so in the case where you are working with the sell side, are you supplying them with names that you'd like to meet with? And are you also doing outreach yourself, even if it's being led by the sell side?
That's a good question. So I will, if I'm doing an NDR with the sell side, I will send them a list of target firms that I have in that specific city or geography. I found that the sell side is more than willing to reach out and to those firms, but my hit rate is usually lower than if I'm self-organizing an NDR. That's just my experience. Usually if I'm doing an NDR with the sell side, I won't reach out or try to self-organize meetings myself. I just feel like it overlaps with their ability to schedule and kind of set the meeting schedule. So typically I won't try to do that. I'll try to do self-organized NDRs on separate days than I would do an event with the sell side.
So I have just 2 more questions that I wanted to cover with you. One is, I think an obvious one, but which is, with last year's, I guess, macroeconomic backdrop and volatility and everything that's happening in the market, have your targeting efforts or has your approach to targeting changed? Are you doing more, less, the same?
Yeah, I'd say my approach to compiling and putting together the targeting list hasn't changed. That I like to kind of keep pretty consistent. The outreach that we're doing has certainly changed. I'm trying to be more proactive, especially around earnings calls, where I'll reach out to firms and try to set up follow-up calls and ask firms if they'd like to have a follow-up call ahead of time. That's the best practice that I try to do anyway, but we're going farther down our list than we were in the past. And I'm also trying to spend more time with current shareholders right now. I found that when things aren't going as well or when the economy is softer, they have more questions. They're getting more questions from their PMs. And so they need a little more frequent of a touch point. And so we try to accommodate that. I'm also trying to do more conferences and NDRs as our schedule allows to try to be out in front of investors, right, and make sure they're familiar with what's happening across the industry and with my own company. But a lot of things are industry driven right now from an economic perspective, and so we're trying to keep people up to date on that.
There seems to be a bit of a different view depending on different IROs or different companies that we speak to. Some people say, there's no good news, and so I don't want to go and talk to investors. And there's other that say exactly what you said, which is it's probably more important that you're out speaking to investors right now because they probably have a lot of questions, and some of them probably aren't reaching out to you to ask them, right? And so I think it's good to take that proactive approach.
Radio silence is a red flag for the investment community.
Yeah.
If you're not saying something, then they create their own narrative or their own story. And sometimes those assumptions that they're making aren't accurate or really what you want to be out there in the investment community. So I try to control that a little bit more than maybe some others.
That's a great point. So my last question is around ESG specific targeting. It seems to be a growing topic of people doing ESG focused roadshows and things like that. Are you doing ESG specific targeting?
Not a lot, to be honest with you, Mark. It's been a challenge for me in the past. I think there's some opportunity there, but I feel like the ESG landscape is evolving so quickly right now. And the way that investment firms look at ESG varies significantly. And Some are very sustainability or environmentally focused. Some may be DEI focused. Others may be governance focused or have other social platforms that they're really focused on. And I feel like it's hard to know or to hit on the key points with a lot of those investment firms that have a wide variety of metrics they're tracking right now. So this isn't to say that ESG targeting is bad, but I've just had less success with it than I have just with kind of the normal targeting process. I do think there's some opportunity if you're in Europe or London. There's some good, really ESG focused firms there that would be good to have meetings with. I have not done a specific ESG focused NDR or so forth. I'll try to mix in those firms along with my regular NDR schedule so that we're touching on those firms and getting our story out there from an ESG perspective. But I haven't done a solely focused one at this point.
Got it. Okay, great. Well, I think that covers all of our questions. But Scott, I really appreciate the time. I think I just love your practical, hands-on approach to investor relations and your approach to targeting. I think it's great. So thank you so much for the time, and hopefully we'll be able to do this again.
Yeah, thanks, Mark. I really appreciate it. It was nice to be here.
I hope you enjoyed today's episode of Winning IR. For more winning ideas, make sure to subscribe to this podcast. This podcast is brought to you by Irwin, a better way to manage investor relations. For more information, visit www.getirwin.com.